Good afternoon on 19th of June. It's a bright, sunny day out, and summer is upon us. How you doing today, Eric?
I'm doing really good. You know, weather's nice. Tax season is reasonably over. You know?
Yeah. Certainly the times are changing. We can see we have a lot less people logged in, but we're hoping that we'll put it up on our website and people can view it any time that they want. So a few key topics we're going to talk about today. What are they, Eric?
Yeah, for sure. There's been a lot of changes recently. One of the big things we have is some CEBA updates. That's been a big one. There's been a lot of questions about that, eligibility, criteria, and stuff like that. So we'll talk about a little bit about that. We have the Qs and 2s, the 75% wage subsidy and the 10% wage subsidy, which we just have a couple reminders that we want to let everybody know about, just because there are some nuances to be aware of.
And things are changing today.
Exactly, things are changing. And the last thing is some Edmonton grants that have been that have come up.
Yeah, absolutely. So maybe let's start with the CEBA. So there I was last night, looking on my phone and just enjoying the evening, and there was a Twitter report came out from a local MP in town, James Cummings, saying that our Minister of Finance, Mr. Marneau, has now delayed the release of CEBA. So if everyone, if you were aware, today, June 19th, was the day that the banks were going to open up the application for CEBA for the others. I call it the others, but initially, if we remember back, CEBA was for corporations that had at least $20,000 in employment income. Initially started at 40. They reduced it down to 20. 20,000 to 1.5 million in T4 income from the 2019 year. That was controversial. It created a little bit of fuss with business owners that do things a little differently. So by May 19th, I believe, they announced the new rules. 1 month late. So the new rules were, you could have non-recurring expenses. There's a list of non-recurring expenses. Eric's going to go over them with you. But if you had these non-recurring expenses and you only paid dividends to yourself and you had no employees, you could still get the CEBA. We've waited a month for these companies to be able to apply, and we still do not have it as of today. The federal government apparently has delayed it because of having IT problems. Go figure. It took them 2 years to get a payroll system squared away. Why do you think it only take them 30 days to get a loan application out? So notwithstanding the fact that today was supposed to be the day, and I got a lot of emails this morning about it, why can't we apply for the new rules on CEBA? It's because the government is slowed it down because of IT. That's unfortunate. Let's talk about the new rules around CEBA and refresh everyone, because I know it's a hot topic, and we're hoping it'll be good to go in the next week or so.
For sure, definitely. So I guess just starting from the top, remember that you have to be a Canadian company that has a business checking account as of March 1, 2020. That's important, the business account more specifically, because it does specifically say that it restricts anyone who is running payroll out of a personal account. That was on the CEBA page. There was one line that specifically explicitly states if you run your payroll out of a personal account, you do not qualify for the CEBA. That's one of the questions I know that we get a lot for people who are more sole proprietor related. They would consider themselves a business, but in the eyes of the CEBA,
they didn't have a separate account with that was tied to that business name. Even if it was a personal business name like a farmer, it didn't qualify.
That's right, exactly. The next one is that you had to have filed a 2018 or 2019 tax return. If you haven't filed either one of those, we would recommend getting on that so that you at least qualify in that aspect. The next thing is we have our non-deferrable. So the original rule is 20,000 to 1.5 million in employment expenses. So that's T4 summary, like whatever shows up in your T4 summary.
So you have to have employees.
Exactly. Yeah. If you fall between that range, you qualify. From there, you would apply online and so forth.
And that system is so good. So if any of you have been slow to apply, it's still there. That system works with all the banks in the country. What doesn't work is the new rules that were announced on May 19th that we're about to discuss.
Exactly. So if you had less than $20,000 in employment expenses, so T4 expenses, then you would be able to qualify. You would be able to attempt to qualify under the second criteria, which is 40,000 to 1.5 million in non-deferrable expenses. Now people ask,
what are non-deferrable expenses?
Exactly. What is a non-deferrable expense? Initially, they had just a quick blurb that says, like utilities, rent, and stuff like that. But they've actually included on their website an expanded list that kind of narrows down exactly what that might entail. So I just have the list here. A couple of ones that are important to note are wages and employment expenses to arm's length parties. Mm-hmm. That's important, the arm's length parts.
So if you had $18,000 or T4 of wages to someone, it didn't qualify into the first one, but you can use that 18 to get you above that $40,000 threshold.
Exactly. Perfect. Exactly. So that's a nice one, because I know a lot of clients also have like subcontractors and stuff like that, which would apply. That would qualify under this. Some of the other ones they include are just as usual. They've got the rent. They've got your insurance, property taxes, telephone, utilities, all that stuff, and those are some of the main ones that they talk about. They say that the list is not complete, and that is not the whole list. So there could be others that if you have recurring non-deferrable expenses that you could add to the list, but these are just the ones that they've identified as being that most people would have. Mm-hmm.
Yeah. Some of the questions I get, they go, because the list really talks, it talks about rent or lease payments, payments for capital equipment, insurance, property taxes, the utilities, but it doesn't say stuff like my supplies. Do supplies account?
Yeah, that's a really good question. The question that would be asked is whether or not it's non-deferrable and reoccurring. Mm-hmm. Would I say that maybe something that you buy once and then never again would be considered? I'm not sure that this area would consider that to be non-deferrable expenses. Mm-hmm. But it could be argued like something like a repair, you can't defer that, it's impossible.
That's right. Mm-hmm. So, I don't want to get into accountanese, I guess, but if it's what we call above the line or part of your gross margin, so stuff you can't call off, it may be questionable. Now, if you'd ordered it at, pre-COVID and it came in, you can't defer the expense, so therefore it should be good. So there is some nuances, but with enough of these expenses, then you should be able to get the C. But now what's really interesting, as I was talking, if we backdrop this onto the rent subsidy, mm-hmm. and if you get a 75% reduction in your rent because you've applied for the CECRA, and it's been approved, so now your rent might have actually pushed you over. Now it's deferred, mm-hmm. right? It's non-reoccurring. That block is now not part of the calculation. So, arguably, if that amount puts you over, you're going to have to do the math on whether it was worth it mm-hmm. to take the rent subsidy and not the CEBA, or do some sort of negotiation with your landlord, maybe to defer payments, but enough that you have to pay today, and you get the $40,000. Because let's remember, you only have to pay back $30,000 of it. $10,000 doesn't have to be paid back if you meet certain requirements, i.e., you pay before December 31st, 2022. Right. Yeah. You only have to pay back $30,000. So there is some math. There is some kind of like holistic thinking about the interaction between the rent subsidy and the CEBA for sure. Yeah. But that's unfortunate that it's not available today. I thought it would make a really great weekend for a lot of business owners, because I know the people that applied for it, they got the money within days. So mm-hmm. Let's hope, fingers crossed, that Bill Marno, our finance minister, is having the people in Ottawa work overtime to get done by Monday morning. Let's hope it's raining in Ottawa so that they can get the work done on the weekend as opposed to enjoying themselves in the lakes and rivers of the Ottawa Valley.
Exactly, for sure. Actually, one of the things that you touched on that I think is good to expand a little more is you had mentioned that the rent subsidy is included in the calculation, thereby reducing your expenses. That is also true for things like the other subsidies that we've been given as mm-hmm. well. So for the 75% wage subsidy, that also applies as well. That will reduce your employment expenses.
Absolutely.
And also the TWSC, which is the 10% wage mm-hmm. subsidy, that also reduces. So any of these new COVID programs that have come out also that are reducing your expenses at the time should be accounted for within the calculation for eligibility for the CEBA. So that's an important thing to know. Unlike the qualification for the Qs and the TWSE and all that, you do need to include it in your calculation. Yeah.
So something to be aware of. If you have any questions, please feel free to get a hold of myself or Eric, and we'll walk you through those calculations and make sure you stay on side of Ottawa. Okay, what's the next subject we're going to talk about?
The next thing that we're going to talk to is actually the Qs and the 2s, the 5% and the 10%.
The wage subsidy.
So it's a little confusing for sure. Initially, we were supposed to be done, well, actually, we should have been done now, but they've extended the 75% wage subsidy all the way to August 29th. So with that, it's important to note that the 75% ends on August 29th, but the 10%, the TWSE, ends June 19th. So that's the end for the 10%. There's no more for that at this time.
So that's today. So I know there's been some confusion because once they amalgamated the 10% program with the 75% program, for the people that will continue to have a 75, that is not really a change. But for those that didn't, and they assumed the 10% was going to continue going on, they're going to be awfully surprised come T4 time when they under-remitted for 3 months that 10%.
Exactly, definitely. Yeah, and that's actually another thing that there's some confusion about is the 10% and the 75%. We still get questions about how those two actually work together. So once the program's over, we're back to full 75%. You're not actually deducting anything. While we're still within the 10% eligibility, that actually is something that you are you can take it off of your remittances, or you can claim the full 75% wage subsidy. If you take it off your remittance, you take it off your 75%. So in total, it's a total of 75%. And like John said, it's going to be exactly like the full 75 anyway. But it is an important distinction and something to remember. People still wonder whether it's the 10% and the 75. It is only the 75.
Yeah. So I suspect, come February 2021, when we're calculating our T4s, there's going to be some amendments, some disclosures, I am sure. That they won't be done 100% every time. Also, if you are using a payroll provider and you're not getting the 75%, and you have the 10%, most likely the payroll provider will just automatically stop doing it, because for most Ceridian ADPs and I think Payworks as well, they've streamlined that 10%. It was initially at the beginning they were kind of clunky, but as we've progressed, it's become much better. I suspect they'll just stop doing that, and it'll happen automatically. So for those of you that didn't get the 75%, and as of today, your last day for the 10%, you should start watching your cash flows for sure.
Definitely, exactly. That brings us to our next point. Is period 4 is just upon us. We're right in it right now. Period 3 ended June 6th. June 6th. Yes, it ended June 6th, and so now period 4 is June 7th to July 3rd. I'm not exactly certain. I'm pretty sure it's July 3rd, but we're in period 4 right now. The CRA has stated the drop in revenue that you need to see in order to qualify for period 4 is still maintaining the criteria that we have always been using, is the 30% drop. If you are eligible in one period, you qualify for the next period as well at this time, just as we always have. So that means if you qualify for period 3 because period 3 has experienced a drop in 30% revenue, you also qualify for period 4, which is ending July 3rd.
Yeah, that's really important, because I think there's, in the business community, certainly, there's a little bit of shock and awe that we still have the program around it. It's a really good program, and there's some people that really need it. But it's a powerful program. I mean, I've seen some wage subsidies in the hundreds of thousands of dollars. I think it's fair to say that as this program progresses, they are going to start to put restrictions on it. So if you're doing some cash flow analysis and preparing for the summer months leading up to kind of, hitting targets for August and preparing even potentially cash flows for the fall, if that's your traditional kind of dip, you may want to have some sort of very conservative cash flow analysis, because I think the consensus in the community certainly is that they will start to put some sort of restrictions. So maybe it has to be an increased drop. Call it, you have to be 50%. And the reimbursement, the subsidy is less. So they're trying to kind of wean people off the program I think that is a consensus in the industry that will happen, but who knows, right? We had a good client. They were in Toronto this week, and it's still shut down, right? So we were talking about the mentality and sort of the sense of, I guess, of the issues. If you're in Edmonton, the streets are full. Everyone's out and about. I mean, I was down at Sylvan Lake last weekend, to Banff this weekend. There's a sense in Alberta that things are kind of picking back up and people are getting out, the churches are open, all that stuff. But you hop on that plane and land in Toronto, it's a different world. No one's leaving their houses. Restaurants aren't open. You're in a hotel. You can only order in. So perhaps, our consensus out here that the wage subsidy will become more restrictive is really based on Alberta's situation and not Toronto. And we all know what happens in Toronto happens in the country. So I guess we don't know, but I think it's wise and prudent to have a very conservative cash flow analysis going into the summer and out into the fall, so that you're not expecting funds that just may not come.
Exactly, for sure, definitely. And it is good to know while you're planning cash flows, they are expecting that they should have an updated legislation for period 5. So in the next 3-4 weeks here, we should be seeing how they're going to be handling the criteria, the eligibility, and any new calculations that we might have to do. So that's important to note as well. Other than that, that's really all there was for the Qs and 2s. Not much to say there. The last thing we're going to talk about today is Edmonton Grants.
Yeah, funny. I was once again perusing my cell phone and I saw something about Edmonton Grants. City of Edmonton actually has some COVID grants. Mm-hmm. So I thought it'd be a really good idea to talk about those. We're really focused on business owners who have premises in the city of Edmonton, but they do have grants. So shoot, what are they?
They do. So there are weekly grants. I don't actually have the total amount of grants that they're issuing, but I know for a fact that they're issuing 25 $1,500 grants, 5 $2,500 grants, and 4 $5,000 grants, matching grants every week. So even this week, they've already done a bunch of intake. Next week, they'll be doing intake starting Monday again. So any business owner in Edmonton that has a business license and is a registered business, I suppose, can apply if you've experienced a drop from 2019 Q2 to 2020 Q2. If you can show that your revenue has declined in between those two periods, you qualify. The only other caveat is that you have to use that money for a specific expense. There has to be a reason to need that money. Mm-hmm. The other thing is it's split the grant into 2 different phases. Phase 1 is just as I described, the 1,500, the 2,500, and the 5,000. And the other phase is phase 2, which starts January 2021, and that's a $25,000.
Oh wow, much bigger.
Much bigger. The only reason, everybody might ask, well, why don't I just wait till January 2021? The matching plan is the important part of this. You have to have the same amount that you're applying for. So, for example, if you apply for the $25,000 grant, you have to
spend $50,000.
Exactly, and you have to have the $25,000. You have to show you can come up with the other half. If you can't show that, then you won't qualify. But the nice thing is, if you try that either for the small micro grants of 1,500, 25, and 5,000. If you don't qualify or you didn't get it in this week, you can always apply next week.
Oh, perfect. So it's kind of like a game show. You spin the wheel, you don't get picked this week, spin it again next week.
Exactly.
And who knows? So
you might have, exactly.
God knows how much that's going to add up to, but that could be quite a bit of money. If you're an Edmonton resident, get ready for your property taxes to go up. So very important. We just kind of tripped up on these, but I think we're going to put them on our Facebook and our Instagram. So with the links on there, so you can hit the links and read up about them. We did go into them. The actual applications, correct me if I'm wrong, are quite long and quite tedious. Mm-hmm. So there's work to be done, a lot more than to get the $40,000 SEBA. But it could be worth it. I think a lot of it a lot of the approvals will be based around property enhancements and stuff like that, or maybe facade enhancements. I think the city wants to also make sure this cityscape is also updated. But I would encourage you to go into our Facebook, go into our Instagram afterwards, hit those links, do some research about them, and see if they're if you fit them.
Yeah, for sure. So it looks like actually we have a question. Says, do we have worksheets for these subsidies, and can we contact Eric or yourself, John, directly for questions? Yes, to both of those things, we have worksheets. All of our worksheets for subsidies are available on our website on our COVID page. That includes the 10% wage subsidy, the 75% wage subsidy. With respect to like the CEBA and the CSB and all that stuff.
We do have pamphlets on our website under the COVID-19 tab that explains them and links to the government websites. It's canada.gc.ca, but on our website, galloandco.ca, hit the COVID tab. We have all the programs, all the criteria listed out there. So yeah, absolutely. Eric is probably a little more reachable than I am from time to time. So certainly if you could email him out, maybe if you could just type your email back
for sure.
In the chat bar. Also, if you went into our webpage, you'd see Eric's beautiful face up there and his email contact there as well. But feel free to email me as well. But yeah, please reach out to any of us at the office, and we'll be more than happy to answer those questions for sure. Certainly Eric and I are probably the most on top of them, but all the staff are aware. If you ask them, they'll make sure that we get it and we answer you guys and get you sorted out correctly.
And I think that's all we had.
Well, that's all the technical updates. I think I'll share one last thing. We're starting to see now the rent relief paperwork coming in and people starting to apply for it. I have to say nothing overly positive about it, to be fair. It's a lot of paperwork. CMHC, which is the authority, the government authority that's managing the program, is overwhelmed. You have 3-4 weeks before you can hear anything back, and most likely they're going to want additional paperwork. So we haven't seen anyone actually get the money yet. We've had a few people apply, because one of the key things you have to apply for is what's your budget for June. We've had a couple situations where some of the tenants said 0, but it came back, well, you're allowed to be open. So some tenants may not want to go back for a variety of reasons, maybe personal health reasons, or they can't afford the requirements. But there'll be a question of, well, why aren't you working if you want the subsidy and you haven't opened up your premise yet, and so your June revenue is 0? There may be some additional questions coming from CMHC on that, because technically, if you're in a jurisdiction like Alberta and Edmonton where you can't open up, why aren't you trying? So we're going to see how that program comes out, but it hasn't been as smooth as any of us had hoped, that's for sure. Okay, well, if there's no more questions, I think we're going to leave it at that, Eric. We'll put this up on our YouTube channel and, of course, on our website, so you can watch all of them on YouTube. I know it's the favorite thing my kids do on Sunday mornings is turn us on and make fun of you and I. Mostly me, not you, Eric. And if you do have any questions, please get a hold of me, Jonathan at galloandco.ca, or Eric at galloandco.ca. We'll be more than happy to answer your questions, give you a call, walk you through this stuff, and collectively together we'll plug away and get this economy going again. Eric, final comments?
No final comments. Just enjoy the sun.
Have a great weekend, guys. And for those of you out there, happy Father's Day.